All right, good morning, everybody. Let me make sure to send this through the announcements that we're getting started. But we're getting started about 10 minutes early today because I wanted to go over Microsoft earnings just right quick. I made a little bit of a tweet about it. If we go over to my Twitter page, LMNO options, or I guess LMN options. Sort of a play on words. But this is what I tweeted. Basically, a thread. Microsoft, another beautiful example of how tech companies can use employee stock compensation and share buybacks to give Wall Street whatever earnings per share they want to see. So you have GAAP earnings and you have non-GAAP earnings. The difference between GAAP earnings and non-GAAP is with non-GAAP, you can include things like share buybacks and employee stock compensation to raise basically expenses that don't matter as much. So they came in at 232. Wall Street was expecting 227 according to Earnings Whisper, but the estimates that I was seeing across Twitter was 230. So they came in slightly higher than expected, but if you look at their non-GAAP, which excludes the employee stock compensation and share buybacks, it came in at $2.20. So GAAP earnings, they missed, but then, of course, with the non-GAAP, they can make it whatever they want to be, depending on how much employee stock compensation they want to give away or how many share buybacks they want to do. They can manipulate the numbers, basically. That's what I'm trying to say. And initially, whenever this headline came out saying that they beat, they were up a crap ton. If you look at MSFT, Microsoft, it originally rallied all the way up to $250 after closing at around $240. But then they came out with guidance at around 5 o'clock. I'm assuming this was during their earnings call. I didn't listen to it to myself. But they had poor guidance for the year. Let's see if I can find any news pieces on their guidance. Microsoft dives into red after forecast misses. CFO warns of deceleration and growth. So this should have been obvious to the market that we would have deceleration in growth, especially for big tech names, because especially with Microsoft, not really sure where a lot of their sales come from. I know they do advertising on LinkedIn, which that's not probably going to slow down. Actually, it might with the job market slowing down. Or it would do better because more people are seeking jobs. Not sure on that. But I think a lot of their revenue probably comes from like hardware sales, like their, laptops and stuff that they sell. Not sure how much comes from the software side. So software is a little bit stickier, like I've been saying. Services, the inflation is sticky there, so that would help them out. But, their hardware sales are likely to slow down because people just don't have as much money to be spending on a new laptop anymore. So right now it's trading at $233.50. My assumption was that it would stay above $235, so it looks like I might have got that one wrong today, but we do have some bearish trades on the table too, so I hedged this position pretty nicely with a QQQ call credit spread, assuming QQQ will be below 281. And then I opened a put debit spread on SPY, assuming the SPY will be below 396 today. The QQQ trade not quite working out yet, but the SPY trade definitely in our favor. If we look at QQQ, currently trading at 283, so it still has a couple more dollars that it needs to come down in order for that to be out of the money now and make my max profit. And then for SPY, currently trading at 396 exactly, so these options should open at around $50 to $60 in value. But yeah, let me make sure that I have all the trades that I had yesterday. I know I typed them in, but I don't think I gave them the closing date, so it didn't register. I think I made like $70 today. Very measly amount, but profits nonetheless. And these came from, let's see, 124 expiration date. So I had a call credit spread. This one I closed yesterday, 124, and then I opened a put credit spread later on. So basically turned a call credit spread into an iron condor. These I closed by myself. They did not expire. And then the prices that I closed them at, I'll have to figure out. I think it was, I'm not even going to guess because probably be wrong on it. Call credit spread. 14 for the call credit spread. And then for the put credit spread, I believe it was 8, but let me just double check the numbers. Put credit spread. All right. Yeah, so that one I closed at 8. So yesterday, if we go over to my calendar, made a total of $68. And then my morning analysis today, so we're going to be bearish. Looks like everybody is voting bearish. 70% people that have voted so far are assuming that SPY is going to end the day red. So the reason why I'm bearish is because of Microsoft earnings. They had bad news with the guidance, but they did beat on earnings per share, so that is kind of neutral, possibly. But they're down like -3% in the pre-market, which is kicking off a bad earnings season for big tech names. So I think there's quite a bit of pain to see today. Price analysis-wise, we're looking at the mother of all trend lines again. We're back below that. And I figured that, Microsoft earnings would be the catalyst to send us below it, and that ended up being the case for us. And then we got some supports. I'll just show you on the chart. 395.78, 394.50, 393.70. Resistance at 398.47 and 400.59. So that is my analysis for today. And we got about 30 seconds till the market's open. So let's watch this unfold. Are you using more iron condors this market season? Been losing money on verticals. Let's see. I actually added this to the spreadsheet recently, which shows me strategy stats. So it'll show me how many of each ones that I've made. And iron condors I've only made 4 of out of the 44 trades that I've made in January. So only about 10% of my positions have been iron condors so far this year. And then most of my positions have been debit spreads. About half. But I am negative on debit spreads, so maybe we should try to avoid those. But the thing about debit spreads is they offer a lot more profit potential, basically, than credit spreads will, because you're taking on less risk to make more. It's a better risk-reward ratio, basically. The QQQ call credit spread is currently only down 250. I originally opened these at 30 cents each. That was a weird glitch, but okay. Originally opened them at 30. Currently, they're going for 72. I think I'm going to test my luck on it, especially still holding the Microsoft put credit spread. I guess we can kind of balance that out. And then the put debit spread that I opened for SPY, currently going for 60. SPY is trading at 395.70 flat. I think these should be going easily for 60 a piece. I think the bid-ask spread on these is just a little bit too wide, 57 and 63. So 6 cent wide bid-ask means that we can't just close it yet. But yeah, we got that 394 price level, 394.50 price level right below us that I'm watching for. Probably might stop at like 395 too, just because it's that nice round number, 395. So let's look up for 395, 394.50. Currently, we're trading at 395.8. Why is the stock market down today? Because of Microsoft earnings. So the biggest, tech name kicking off earnings season, they had poor guidance. They beat on the earnings per share, but they had poor guidance. So people are worried about the tech stocks slowing down, basically. Looks like QQQ is making its way down to 282, so we might have made a decent decision to hold that, what was it, a call credit spread at 281, 282 strike prices. It's still going for 66. I think that's a little bit cheap, or a little bit, I don't know. I feel like it should be going for like 70 or so, but it's going for 65, so I feel like it's a little bit cheap. But yeah, put debit spread, SPY's trading at 395.25 now. Now they're going for over 60 a piece. I originally opened these at 36, so this is up by 150 currently. Let's see. Let's head on over to SPY. Microsoft is down to 233, so that is down how much? Like 4%, I'm guessing. Yeah, 3.6% today. That's tough for a beat on their earnings, but it's all about guidance. So maybe the focus for this quarter in the earnings season is all about guidance rather than just looking at the earnings per share number. Interesting enough. I'm really interested to see what Tesla does with their guidance. I wonder if they'll be able to maintain that 50% compound annual growth rate. If they'll give any sort of guidance around that, or if it's going to change, that would definitely shake up the stock in one direction or another. If they can maintain that 50% estimated growth, I would think that would be pretty positive for the stock. But if they come in saying, oh, we can only do like 45% growth now, or 40% growth now, or whatever, and it's below 50%, I think the markets might take that as a bad sign for Tesla, because they've been pricing in that 50% growth per year for the next 5-10 years, whatever. Do I play overnight options on Tesla? I think I have a call credit spread on it that expires tomorrow or Friday, so yeah, still holding on to that. Originally opened this at 26 each. Now they're going for like 42, 45. So I probably could have got a lot better credit than I did, but I'm going to be holding this one. I also have shares of Tesla myself. Let's see, 5 shares on here, and then like 20 or 30 shares over on Fidelity too. So still holding. I can make money either way. That's the great part about holding shares and call credit spreads. But all right, seems like the markets might be possibly making a bounce. Microsoft is not, though. Microsoft is still dropping at the moment. Interesting enough, I would think that the markets would be pulled by Microsoft. Was there any other big earnings that we should be looking at? Let me check. All right, we have Microsoft, Intuitive, Texas Instruments, which is a chip maker company. Actually, I kind of want to look at Texas Instruments just to see what AMD, Nvidia, all those stocks are going to report. I think it's just T is a ticker symbol. No, that's AT&T. No, what is Texas Instruments? Is it TXN or something like that? Let's see. Texas Instrument stock. TXN, yeah. I thought it was. So Texas Instruments is seeing a pretty substantial drop. I'm not sure if that's swayed by Microsoft. It's basically the same thing that happened to Microsoft. Went up a shit ton, and then fell a little bit, and now it's falling a lot in the morning. So that means that AMD, that means that Nvidia, and all the other big chip maker names might be in for a bit of a hurting. I was very surprised when I saw AMD trading at $73. I was looking at this morning, and I'm like, that doesn't make a lot of sense because, growth is going to slow down, and if their next earnings doesn't come in line with expectations, or if they, come in with lower growth estimates like Microsoft did, then AMD could be in for a bit of a hurting. The earnings is supposed to be on 1/31, so we still have 6 days, so I'm assuming that's next Wednesday. I want to check the IVP, or IV percentile, which is currently on the daily chart. Over the last year, IVP is at 31. I think that could be a decent setup for a put option on AMD, and I think there's a good chance that it's going to fill that gap down to $70. Now, let's see if we can get it for cheap. That's the issue about buying AMD options, is sometimes they can get a bit expensive just because there's so much demand, so many people that trade AMD. But with IVP, or IV percentile, being at 31%, that means that the options should be relatively cheap. So that's why I look at IV percentile. Let me actually change the settings here and decrease the bars to the right. I'm not sure why it's like, it looks like it's like 100 bars to the right, but I don't know, my setup just looks weird today. This doesn't look like a yearly time frame. This only goes back to September of 2022, so very strange. Anyway. Yeah, so let me check out the AMD puts. Assuming that it'll go down to $70, I would want to break even of $70. Assuming that it's going to fill that gap. And they are very cheap for this week's expiration date. And next week's expiration date, you're paying a good like $300-400 for them. Looking at the 74 put, you're paying $360, so your break even is $70.45 ish, $70.50. Let's see. And then the next one up, the $75 strike price, is going for $400, so the break even on that is $71. I think I want the $75 strike price. Just not a huge fan of paying $400 for an earnings report. Obviously, if the earnings comes in really bad, then like you can make a crap ton of money. If it goes down to something like, I don't know, $67, that option would have like $900 of value. So you would turn your $400 into $900, but that's if it goes all the way down to that price level. I might prefer to do a put debit spread depending on how cheap that is. So if you look at the 71.70 put debit spread, it's going for 36 now, which doesn't offer as much upside as I would have expected. So I'd rather do the put and pay the extra money for it, honestly. So I'm looking at the 75 put on AMD. The ask on it is for $4, so I'm paying $400, which is a little bit outside of my comfort zone when it comes to trading on earnings. But I accidentally tried to sell a put option. That was the wrong move. That would have been really bad. AT&T earnings are up. I'll check on that. AT&T is, a service, so that I would expect that to be the case, because like people aren't gonna give up their phone plan because we're going into a recession, right? And people still need phones and to be able to talk to other people, so not a bad place to put your money. But let me type in my trade alert. P1F. Oh god, I can't type. Come on now. ST for swing trade. Alright, just bought a new put, AMD put, and this one expires next Friday, which is 2/3 expiration. February. We're already coming up on February. That is wildin'. Don't trade in T-ticker because that has been flat for 5 years. Doesn't matter. Well, the thing about T is that it gives a dividend yield. So they pay 27 cents for every share that you own of it, right? So that means that they're paying out 27 over a price of $20 right now. They're paying you a 1.35% dividend every quarter. So 1.3. If you reinvest the dividends, you would 1.013 to the fourth power. That means you would get about a 5% dividend yield on AT&T. So yeah, it's trading flat, but you're also getting paid income by it. QQQ is so close to that 282 mark, but not quite there. Maybe we've seen all the move that we're going to see today. And then the Microsoft, currently at 232 and some change. What do I think of Oatly? I think that oat milk is a fad. I don't know. Like, I don't really see the appeal of oat milk myself. I'm not sure about like the general population. I would just rather drink. I guess people that are lactose intolerant, it makes sense. But like even people that are lactose intolerant will still drink regular milk. I know plenty of lactose intolerant people that still drink regular milk and deal with the shits and farts and all the stuff that comes with that. Love your TA. Didn't know you went live in the morning. Thanks. Yeah. All right. SPY is just below that 396 mark. So we're testing the waters with that 396 put debit spread. Right. This ought to be going for 60 cents. No problem. But the markets keep wanting to undersell me. So I'm just going to keep it. Say, screw the market maker. I know what my contracts are worth. And then looking at the Microsoft down 58 for this trade. I think I'm just going to hold it. So I'm going to hedge the QQQ call credit spread with the Microsoft put credit spread and see which one works out better. And then this is the one that I want to close out of, hopefully by the end of today's live session. Probably not going to open any new trades besides that AMD put that I just snagged up. So I bought a 75 put on AMD, paid $400 for it. It's up slightly. Let's check the fundamentals though. So gold is actually down today, which means that the dollar is likely up. The bonds are actually up today with TLT positive 0.2%. Love my 400 T shares until taxes come along. Yeah. Fuck taxes. Yeah, TLT currently trading at 107.50. So it's on the upper end of the range. We have the Fed meeting scheduled for the 1st. February 1st, that is. Now, the bond markets expect like a 95% chance that the Fed is going to do a 25 basis point rate hike. And 99% of the time, well, actually 100% of the time over the last 60 years, the Fed has followed whatever the Fed futures has told it. If they decide to go against the Fed futures with a 50 basis point rate hike instead, that would cause some chaos in the market. But I don't think that's going to happen. What do you think of the new tax bill, 30% sales tax instead of income tax? Really? I haven't heard of that. Tax bill. That's brilliant in my opinion. If you get rid of income tax and then just tax people for like what they buy, then but that's also a bad thing for the economy. That also disincentivizes people to spend money. So it is negative in that sense, but it's also rewarding for the people that don't spend a lot of money on luxurious goods. Like somebody that goes out and buys like a Rolls Royce, yeah, they should probably be taxed more than somebody that goes out and buys a fucking Honda, right? But I mean, that's my opinion. I've always been in favor of a high sales tax and then no income tax. It's just made sense, but the drawback of it is that you could get possibly less spending. You know, if you have to pay 30% extra on, I don't know, food or something. I don't know if you could do it on food and like other goods though. That would be kind of screwed up. I'd have to look into that a little bit more. Sales tax bill. McCarthy shoots down national sale. Oh, so McCarthy's already said no. Good morning, Jai. Here's what you need to know about the GOP bill to abolish the tax code. National sales tax is a terrible idea. Arr. Interesting. Yeah. I think that's probably the fairest way to tax people, because people that make more money are going to spend more money generally, and then people that don't make as much money aren't going to spend as much. So if you want a true fair tax, then I think that's the way to do it. But that's just my opinion on the matter. But yeah, that QQQ trade starting to work out a little bit better. They're going for 68 now. We just need it to come down $2 more, and I don't think. I mean, it's already down like 2%. So what are the odds of it coming down another 1%, roughly? It's kind of edgy, depending on Microsoft, of course. But that SPY trade still going for under 60. I feel like I'm just getting cheated on this damn SPY put debit spread. Market makers hate me. Who is the one that proposed that? Because McCarthy is shooting it down, so I'm assuming that it wasn't GOP members, but I'm not sure. More effectively kills the legislation. Republican from California says he opposes legislation to abolish the IRS and replace federal taxes with 30% income. Abolish the IRS. I feel like that's a Ted Cruz. I feel like Ted Cruz is the one that did this. It was the Republican Party. Yeah, I figured it would be. Rich people will travel overseas to buy the tin. That's true. People will just travel overseas because, yeah, if they want to make like big purchase items, then I guess that makes sense. They'll just buy it internationally, which also screws over the U.S. economy. So we're damned if we do, damned if we don't. Funny enough. I say we just get rid of taxes altogether, but it's not like the government makes good use of them, most of the time at least. Usually the taxes just go to enrich the politicians and pay for their military and pay for their chairs. I don't know if y'all know, but they spend like millions of dollars a year on furniture for Congress, which is ridiculous. Let's see. Congress furniture budget. Each senator is authorized for $40,000 in furniture for their office. Like, why do you need $40,000 a year for new furniture? A little bit excessive, but welcome to America. Let's see. QQQ is finally coming down to 282, so we might be able to snag out of that call credit spread. Let me get rid of this implied volatility percentile. We don't really need it anymore. Do I use the wheel strategy? Not right now, no. Wheel strategy is too capital intensive, uses too much cash for me. I am saving cash. Well, I was saving cash until I started building my app, and now all of my life savings is going towards building a options trading journal. So, but yeah, I would say for most people, it's better to save cash than to run the wheel strategy for right now. That's what the Fed is telling you whenever they're raising interest rates. They want you to save money, and you don't want to fight against the Fed. People are all about don't fight the Fed whenever the markets were going up like crazy and they were doing unlimited quantitative easing. So keep that same energy whenever they're tightening. Whenever they're tightening, you want to tighten your wallet. You want to save your money. Don't fight the Fed. Buddy Carter was the one who proposed it. Interesting. Congress furniture budget. $40,000 a year for each Congress member. Like, that's just ridiculous. And there's so much other shit that they spend money like fucking drunk sailors on. Like, that's just the tip of the iceberg. Like, if y'all really want to get into it, I can show y'all what Congress spends money on, and it's insane. Ooh, we making money today. I'm going to be able to pay for Congress's furniture in one day. No, I'm just kidding. Wouldn't that be nice? All right, so this I can get behind. $75 to close out of these put debit spreads. I like that. It's going for 70 and 74. I think it should be worth 75, so let's try to close them at 75. I've got 6 of these, so I'll try to close 6 at 75. I originally opened them for 36 each. So hopefully this order gets filled, but with Robinhood, likely not. All right. It's going for 75 at the mid price now. Now that it's trading at like $3.94, which means that it should be going for like 80 cents, but we will always get robbed on Robinhood. All right, let me check in on the other trade in the meantime. The call credit spread for Qs down to 60 apiece. Beautiful. Okay. Watch this trade swing all the way around. Like at one point I was down like 90% for this trade. Like these were trading at 96 cents a piece. Obviously I could have got a lot more credit if I had opened it then, but my assumption, I opened this I think on like the 20th or the 23rd. Let's see. Yeah, I originally opened these on the 20th, so I opened them too early. My timing is always freaking awful. But more often than not, I usually end up being right in the end, unless I choose the wrong expiration date, which also happens. But let's see if this debit spread gets filled for me or not. Probably freaking not. We're looking at that 281.44 price level for QQQ that it might just bounce on. Microsoft is trading at 231 now, so both of those options are in the money, which means that I might take max loss on it. But with the 281, 282 call credit spread for Qs, that'll balance it out at least. And I think I put down a lot less risk for the Microsoft trade than I did for Qs, so it'll end up profitable in the end. QQQ went below 281.44, so that might end up breaking. Looks like it ended up bouncing on it, actually, for a quick second. Still no fill for the put debit spreads. Trying to close them at 75. I guess we'll have to negotiate down. I freaking hate negotiating with market makers. The worst people to negotiate with. They will always try to cheap you out. Alright. I'll give y'all 74. Yeah, that looks like a pretty solid bounce in 281.44 right now for Qs. Yeah, for one person, it's a budget of $40,000 each for Congress and their furniture. Like, I wish I had a $40,000 furniture budget. I would be living in a much nicer... I would have a much nicer setup than what I got here. Recording in the freaking attic on a IKEA table, and this... that is a closet door. I think my furniture budget is like maybe 150, 200. Cheap as hell out here. Alright, this order is just not going through for the life of me. Either we go below 281.44 and crack below, or nah. Alright, looks like we finally closed that order. Sweet. So I got out at 74. Again, I originally opened those at like 36. Oh, that was loud as hell. Discord. So send that through the alert system. By the way, if y'all want to see the alerts after the live session, because I do trade after 10:30 when this ends, I will link this right here. And then you also get the spreadsheet that I have. Super detailed. Y'all will see. Closing options alert. Premium 101. Freemium. Just took profits on the SPY 396, 397. Put debit spread that expires today 125 at 674 each. All right. So we'll go over to the drive and make sure we type that one in. Put debit spread. That's one we closed just now, and we got them for 74 a piece. So made $228. I can't fucking read. A profit on that trade, and still holding that QQQ call credit spread, and still holding the Microsoft put credit spread. So those are hedges against one another. And then I have this SPY. Oh, this one I just closed, right? So I'll just type in the date. 125 is today's date. Closed it myself. Did not expire. So I still got these two trades open. Few other trades still left. But currently up 600 for the day. Nice little 2% almost. And hopefully one of these damn trades, QQQ or Microsoft, end up working out. But I don't know. I opened these at 30. Currently they're going for 54. How much you put credit spread, debit spread on Fidelity? I don't see them. They're called Strangle or Straddle. With Fidelity, they might be called something along the lines of vertical spreads, if I had to guess. That's how I think Thinkorswim labels them. So if I go over to the trade tab on Thinkorswim, right click on the option chain, one of these, like just choose a random one, 281. If I do a buy, that would be a debit spread. If I do a sell, that would be a credit spread. But it's going to show them as verticals instead of either debit or credit spreads. So if you don't see debit or credit spreads, see if you see verticals. And then strangle and straddle are different. So what a strangle is, think of strangling two sides of the neck. It is buying a call and buying a put with separate strike prices, right? And then you have a straddle. It's kind of like this, or I guess like this, where you buy a call option and a put option with the same strike price. So a straddle and a strangle are different from a spread option. You can do a similar trade like a reverse iron butterfly or a long iron butterfly or a long iron condor, and that would be a spread option and a sort of like a strangler straddle, but it's slightly different. All right, it looks like we caught a bid or went up on that 281.44 mark, so might be worth closing out of the QQQ call credit spread. Definitely still bearish for today. If we go over to RSI, MACD, we just got out of oversold territory, currently at 34. I'll say if we go back above 50, then I'll exit. I'm not convinced that the sell-off is over yet. So, let me get rid of the price left extension on, make this yellow, just to make it prettier. So if we go back above 50 RSI, then they can convince me that this trade isn't going to work out. But for right now, I'm still convinced with Microsoft being down, like 3.5%, 4% today. Yeah, almost 4%. I'm convinced that the markets are going to keep going down. Tesla's under 140 now. Kind of want to add some size to my Tesla trade, but kind of worried about it. All right, so if we look at the Tesla trade, it's up by $40 today, but down 70 overall. I opened 5 at 26, so I risked like 350 for this trade. So I feel like that's an appropriate risk for this trade, in my opinion, given my account size. So I don't think I'll add more to it. I think I'll just keep holding and we'll see. My biggest thing with Tesla that I'm probably going to look for is if they adjust the 50% year-over-year growth guidance. If they do, I think that would be majorly concerning for Tesla investors, because that's the big idea that they've been pitching over the last couple of years. And now with the Fed tightening with higher interest rates and tightening the money supply, it might not be possible anymore. Maybe they were predicting, 0% interest rates for the next 5 years, and that's how they would justify their 50% growth. Now with the interest rates higher, they might not be able to reach that. We'll have to see. I do know that they raised their prices on the Model Y by like $1,000. It was like $52,900, and now it's like $53,700 or something like that. So they did go up in their prices, which does mean that there's probably some demand at the new price levels. So that's good. But that was like a 15% cut on their on the price of the vehicle. So that means a 50% cut to their margins. Before they were going for like 64. Now they're going for 50. We'll call it 54. So a $10 cut, 1 minus that is, like a 15% cut. So that means that their margins are going to drop by roughly the same, about 15%. So Tesla. That's the big one for today after hours. That, I think, could really start to shake up the markets. And again, it's all going to depend on their guidance. I feel like that's probably going to be the main highlight for most earnings report is what is the guidance going to be for this year? Because everybody's expecting a recession, right? So we want to at least confirm or deny whether we're going to get that recession, and people will probably do that by judging through earnings and guidance. Visa's down $2 today. That glitch yesterday was crazy. 196 to 250 and back to the same price. So that was a stock market glitch yesterday. Some people are proposing that it was a giant sell order. Other people are saying that it could be a Russia hack or something like that. We really have no idea what the hell is going on with what happened yesterday, and we probably never will know because the people that are investigating it is the New York Stock Exchange, and you really think that they're going to be honest if it was a Russian hack or if it was a huge sell order? Probably not. Corruption, yeah, absolutely. Visa, though, I do want to trade Visa. I think Visa's going to have a really tough earnings report. Market makers lost money and they had to fix it. Yeah. I mean, a lot of people had like stop losses that got, hit because of that glitch. So I wonder if the people that, lost money because of their stop losses are going to be reimbursed. My guess is probably fucking no, because who cares about, retail traders who had their stop losses and had them hit. But I mean, I feel like it's only fair, not that the stock market is fair by any means. I feel like it's only fair that those people get reimbursed since it was inorganic for their stop losses to be hit. But a lot of people got stopped out of their positions yesterday, which is really screwed up. But yeah, Visa, their earnings report is tomorrow after hours, 126. Visa, I think, is going to have a bad earnings because of retail sales being down for the last 3 months of the year, which is this report, the fourth quarter, or the last quarter of the year. So I think Visa is going to have a bad earnings. The implied volatility is very low, if I remember right. Right now, the implied volatility is 15. So that means 85% of the time over the last year, implied volatility has been higher than it is right now, literally 1 day out from their earnings report. So for me, I think that's going to result in a pretty decent sell-off. I would buy a put option, but I know that Visa put options, even if implied volatility is so low, are going to be stupid expensive because this is a $200 stock. So but if I had to guess, I would think they would probably go down like 3 price levels from where they're at right now at 221. 218 seems too easy, so I feel like that might be pretty expensive for even a put debit spread. Actually, the puts that expire this week aren't that bad. The 217.50 put, or sorry, the 220 put is going for 360. The break even on that is 216.50. But my price assumption is below 218. So they would have to go down to like the 215.42 price level for the 217, or sorry, the 220 put for me to make profits on that. But wow, the AMD put that I opened earlier is up 20% already. But yeah, I think we're going down to 218. So I would probably do a 220, 217.50 put debit spread. This one's going for $1 right now, and the max profit for it's like 140, 150. So I think that's actually a decent deal. And for this trade, I'd probably put down a good, I don't know, like 200, 300. Make sure I have the right strike prices chosen, yeah. All right. Yeah, so I'm going to put down 300 in risk for this trade. So it's a Visa put debit spread, and I am assuming that they're going to be below 217.50, so it is actually a little bit below the 218.14 price level, but that's all right with me. just because the volatility is going to be so high. It might blow past the 218. But yeah, new options alerts. Just opened a new Visa put debit spread that expires this week on the 27th. And I paid how much each? $1 each. All right, sweet. Now I do want to do a quick earnings analysis just to confirm my bias, I guess. If we go to Visa, earningswhispers.com, Visa. Nice divergence setting up on the 5-minute for AMD. Let's see, Visa currently expectations is $2 earnings per share. And if we go over to Visa earnings history, the way that I do it is I take the last 8 earnings reports and take the average. So basically the average earnings per share each quarter over the last 2 years. Really? I have to log into marketbeat.com now? Well, this is annoying. I don't want to sign up for your stupid newsletter to see my page. Refresh it? Okay. No, it just does the same thing. That's so dumb. Since when are they doing this? How stupid. This must have been like implemented recently, like the last couple of days. I've never seen them ask for my email before. No thanks. Continue to market beat. You had to close a tab and reopen it? Let's see. 1, 2, 3, 4, 5, 6, 7, 8. 142, 138, 149, 162. I haven't seen any above 2 so far. 181, 179, 198, 193, and that's it. 1, 2, 3, 4, 5, 6, 7, 8. Yep. So 1342 earnings per share over the last 8 quarters. Divide that by 8. You come up with an average of 168 earnings per share over the last 8 quarters, the average. And the last report came in at 193. The one before that, 198. So Wall Street expects a record earnings per share whenever transactions are down for the fourth quarter. Like if you look at the month-over-month retail sales, it's not pointing to a good sign. Services might make up for that if I had to guess. But I think it's going to be hard for them to pull off a beat on the earnings per share. Looking at the revenue, $7.72 billion expected, which again they haven't done before. Well, actually they did in their latest quarter. So they're expecting a reduction in revenue, but an increase in earnings per share, which makes no sense. But yeah, I think this one's going to be a miss. And a pretty decent miss at that, if I had to guess. But we'll have to see what goes on with Visa. Their earnings report is tomorrow after hours, so still got some time to wait for that. Any interest in taking on Valero earnings? Not really. I'm not a huge fan of trading oil and gas stocks. Not that I have anything against them. I just don't really care for following the news on oil and stuff, personally. Damn, 76% are saying that today's going to end the day red. Yeah, I mean, with SPY down 1.3% today, I feel like that's a given at this point. Microsoft is creeping back up, but Q's is actually coming down some more. Interesting enough. All right, let me type in the couple of trades that I made today. So the new Visa trade, the AMD put that I bought. Let me make sure that I log those so we don't forget it. Always log and journal your trades. That way you can remember it for later and learn from your mistakes and learn from your wins. I think I opened like 3 trades this morning. All right, so the 75 put on AMD. AMD put, whoops, type that in wrong. AMD put, this is a long put, just a regular put basically. Obviously a bearish strategy. Expiration date is for next week, 2/3, so 9 days until expiration. The strike price that I chose was 75, and I ended up paying $4. And then I opened the Visa, I think next. Yeah, 217, 220 put debit spread. Visa put debit, bearish strategy. Expiration date is this week, so 1/27. Strike price I chose again were 220 for the long, 217.5 for the short. I opened 3 of these for $1 each. So I spent a total of $300. And so far for the month, up $350. As long as we're positive, I'll be happy. But hopefully we can make some decent profits. So far, this earnings season is shaping up to be pretty good. So hopefully we continue that trend. Usually earnings season is when I get my kind of edge in for the markets. But yeah, that's all the trades I'm making today. Still holding the QQQ call credit spread, assuming under 281 today. Still holding the Microsoft put credit spread, assuming over 235 today. So those are balancing themselves out. I've got more weight on the QQQ call credit spread than I have for the Microsoft put credit spread. So my assumption is that the markets will probably still continue to head down, but it's really anybody's best guess. So that is the end for today. Let me just check on the price levels. Maybe draw up give myself an alert for when it crosses below anything important, maybe below 281, so I know that both of these options have become in the money, or out of the money, I should say. So create an alert at or below 281. And that is all from me today, and I'll catch y'all tomorrow at the same time, 9:30 in the morning. See you, everybody.